Jarvis. Today we're going to be talking about how to find earnings reports, specifically going over the recent earnings of Microsoft, Meta, Tesla, and Apple last week, delving through their earnings reports to see, like, out of these mega caps, which one would you or what would I potentially be interested in investing in over the long term. Um, with that said, let me get into the presentation, right? So, just to introduce myself once again, if you don't know who I am, I'm Omar Reed. I'm a lawyer that invests on the side. I have about a couple $100,000 in the market, so I am always looking at it. Um, if you want to find an earnings report of a company, right? These things, like, you'll see a lot of news reports on them, but what you want to do is you want to Google that particular stock or company and then put in investor relations. And then inside of that particular web page that you might click from a Google search, you're going to be looking for financial statements or income statements on a particular company, right? So we're going to start with Microsoft. Microsoft reported, I think it was Tuesday or Wednesday last week. And just to give you some insight of how I would do that, I would type in Microsoft investor relations and then click on investor relations, and then I would go to the earnings and financials tab here, right? And go to income statements. And so what you'll see is something like this, or a link to click that says financial statements, right? Earnings call slides, press releases. This was they filed the 10Q, and you'll get a lot of the annual information there, right? So this is what you're looking at. And I prefer the Excel spreadsheet version, at least of Microsoft's earnings. This isn't necessarily always the case, right? And this is what I'm going to be looking at when I'm looking at, hey, how much is Microsoft really making, right? So wait, where are we? Come on, internet. Okay, here we are. So looking at Microsoft, if you're looking at what they made this quarter, right? The 3 months ended at the end of the year, December 31st, 2024, as comparison to the quarter in 2023, right? Microsoft's product revenue is down, but its service revenue is way up. Its total revenue was up from last quarter of last year being 62 billion. Now it's 69.6 billion, right? Its net income is up from 21.8 billion to 24.1 billion. So if we're looking at Microsoft, Microsoft is growing as a company. If you looked at the stock price, though, let me go to Thinkorswim. And you look at Microsoft's stock price, it fell after the earnings announcement. And you ask yourself, wait, how is a company that's growing earnings, why did the stock price go down? Well, it's because people had more grandiose expectations for Microsoft's earnings than what it reported. So it did beat its expectations, but it didn't blow the expectations out of the water, especially as it relates to its future guidance. When some of the officers came and talked about what they expect the next couple of quarters to look like. So Microsoft appears to be a good company that's making money. It's growing revenue consistently. And so, but the stock price, it's almost like a coin flip a lot of times. So if you're playing earnings from a trading standpoint, you really got to be careful, because just because a company produces earnings that look good doesn't necessarily mean that the stock or the stock price is going to react the way that you would think it would, right? And what that tells me is primarily is that Wall Street thought that these earnings were going to be better, or the future guidance was going to be better. Now, one of the things you really need to look at when you're looking at these companies is, like, how are they making money, right? what like where is the money coming from? And so if you're looking at the segment revenue specifically here, right? So the revenue and the productivity and business processes of segment increased to 29.4 billion, up from 25.8 billion. The intelligent cloud revenue, which is its big pony right now, Azure, Microsoft Azure, increased to 25.5 billion, up from 21.5 billion. And then you have the personal computing market. Now, if you ask you like, hey, what are these things, right? Like, I might know what Azure is in the cloud, but what's in this segment and what's in this segment? If you go to Microsoft's investor relations page, oh, hold on, and go to segment revenue, and you click on these specific segments, it'll tell you, right? Isaac, can you see this new pop up here? Or did it not pop up?
The annual release, FY25 quarter?
No,
Yes.
no, I think, okay, let me unshare this and share this screen. Right, can you see this little screen now?
Yes, I do.
All right, so if you want to figure out exactly how they're segmenting their revenue, specifically Microsoft, if you click that category, it's going to tell you what it is. So in the productivity and business processes segment, it's their Microsoft 365 products. So we're talking about like Word, PowerPoint, Excel, all of that stuff. Even like their consumer subscriptions, and this also includes LinkedIn. If you didn't know that Microsoft owns LinkedIn, and all of those subscriptions and things as well. What happened? Yeah. What did I do? I lost. There it is. So, and then from the personal computing side, well, so we talked about the cloud side. That's mostly Azure. So it's like their version of Amazon Web Services, Google's cloud, things of that nature, right? So that's the thing that's been growing, and what people are really believing that's going to keep pushing Microsoft forward in terms of their earnings. I think this is actually the segment that missed the grandiose expectations, even though it's still growing by damn near 20% from what it looks like. And then on the personal computing side, this is the old school Windows, Xbox, the gaming stuff, right? And then some search and news, so like Bing, right? So if you're breaking down the categories and you're wondering what's inside of the categories, that's how you would do it for Microsoft specifically, right? All right. Going back to their earnings. Pull that up. With that said, I like Microsoft, right? I get that they may have missed some expectations on the growth of their cloud, but look at that. Like it went from 21.5 billion to 25.5 billion. This is my opinion once again. And then from a 6 month standpoint, it went from 41.5 billion to 49.6 billion. So that's been a huge driver of growth for the company specifically. So I really still like Microsoft, right? They still own a significant portion of ChatGPT, which is still the leading LLM as of this particular moment. If you look at their balance sheet too, right, they got $17 billion, $17.4 billion of cash to deploy, right? Their total assets is 533 billion, and their total liabilities is 231 billion, right? So that's a really good asset to liability ratio. If there was a downturn in the economy, if these tariffs start, screwing with some of these companies, it has two and a half to one ratio in terms of the assets it has versus the liabilities, or like debts, right? When I'm talking about liabilities, and it has $17.4 billion in cash to go acquire something, to keep researching, to throw some more money into something, right? So that's Microsoft. But I showed you the stock price, so this is one that I would be looking for on a pullback personally. It's a stock that Microsoft I think is going to be around, is going to be one of the leaders in the next 5 to 10 years. Specifically, how it's positioned right now with LinkedIn on the social side, right? It has a social media site or company. It has a cloud computing component, which is growing in terms of Microsoft Azure. It owns a significant portion of OpenAI in terms of ChatGPT. So I think it's well positioned, and people are still using. If you're not on a Mac, you're pretty much using a Windows product if you are inside of a business pretty much anywhere in America, right? Most American businesses, at least from my experience, don't have Mac computers because they're too expensive. They all have PCs. And if you have a PC, you're running on Windows architecture, which is, a Microsoft product, right? That's what got Microsoft to where we are today. And I just don't see a mass switch to Apple products on the PC side. So if that's not the case, then we're going to be seeing Windows operating systems on most of the business community's computers in the office for the foreseeable future. At least that's my opinion. So I do like Microsoft. I'll be looking for it on a pullback. We can take the stock price and do the fib levels and whatnot later. But this is one, I love Microsoft as a stock. I think it's as sure of a bet as you can. I don't like it at an all time high, but this is one of those things where it's like, hey, maybe they oversold this thing when you're looking at like how much money this 2-3 trillion dollar company makes, right? So up next, after Microsoft, we're going to talk about Meta, right? We talked about, so for every one of these stocks too, I want to tell people how they make money. So just reviewing Microsoft, how does Microsoft make money? They sell their Microsoft 365 products, right? That's like number one in terms of productivity and all of their software based stuff that helps you run your business using Windows, right? Number two, Microsoft makes money selling cloud computing services to a lot of these large businesses that they sell their software products to, right? And then number three is old school Windows, LinkedIn, and gaming, Xbox, and the catalogs for games and stuff like that. Those are, I would say, Microsoft's three verticals, right? Those are the three ways that Microsoft makes money. In terms of Meta, how Meta is a little bit different is Meta really only makes money in one way. And this is why I think that Zuckerberg has been scrambling to try and get some sort of hardware, like with the glasses, with the goggles, because right now the only way to really access a Meta product is by going through Apple or Google, right? The Android or an iPhone. And notoriously, Zuckerberg doesn't have a good relationship with Apple. Apple has tried to kill Meta's business on multiple occasions, from its changes to the privacy settings and things of that nature. So, what Meta is trying to do is, at least this is my hypothesis, it would like the new glasses that it's creating or some new AR experience that it's creating to replace your phone. And if they can build some sort of hardware product that replaces your phone, like glasses are a lot easier to carry around in your phone. So if you could do all of the things in your phone, in your glasses or your goggles, then Meta can have more control over its future if it owns the hardware as well as the software social media platform. So just looking at their earnings specifically, and I'm going straight to the segments page. Once again, if I were to look for Meta earnings, I would Google Meta uh, investor relations, go to their investor relations page, and then go find their income statements or their financial statements on the page, right? It's relatively simple. You might have to look around for a couple of minutes because each page looks a little bit different, but they're all publicly traded companies that have to report this information, so it's going to be readily available. If you're looking at Meta, and if you were looking at their stock price popped up. It did the exact opposite of what Microsoft did. But if you look at their numbers, right, the last quarter, the last same quarter of last year was 38.7 billion, and this quarter is 46.7 billion. That's a huge jump, and this is all advertising revenue. This is just when you're scrolling on Facebook, on Instagram, and you get that ad. When you're scrolling reels and then you get the ad, your stories, and you get the ad, that's where all of Meta's revenue is coming from right now, is advertising. So it is a one trick pony. Because look at this other revenue, right? Nothing to slouch out for a regular company, but out of this 48 billion, only 519 is other revenue, and they're calling it other revenue, um, mostly because it's not really significant enough to kind of parse out other than advertising. At least that's my hypothesis, right? So their apps are making them a ton of money, and then they have reality labs as well, and I think these are the goggles or the glasses and the things of that nature. But as you see, out of this 48.3 billion in revenue, only 1 billion is the hardware stuff. So they're trying to build this business to be their second vertical, but if we're really looking at Facebook, honestly, they really only have one true vertical, and that's the ads that they put on all of their apps, right? Let's look at what's some other segments. Once again, I always like to look at the balance sheet to go figure out like how much cash, what's the asset to liability ratio. Once again, they got a treasure trove of cash, right? Meta has so much cash they don't know what to do with it. They have $43.8 billion in cash on hand, right? So they can acquire anything. And honestly, that's been the issue. What's crazy is there was an HP and another company were trying to merge, and the Trump administration actually blocked it, which shocked me because I thought they were going to do a complete 180 to what the Biden administration was going to do as it relates to M&A and a lot of these companies getting bigger. Meta would love to buy TikTok. Meta would love to buy Snapchat. It would love to buy any other social media app out there, but the government hasn't let it, right? So, really, what Meta does, as a result, because, right, initially it had Facebook, then it bought Instagram. Then it bought Vine and killed Vine and just integrated Vine into Instagram. Once again, if you ask me, I just remember that time they didn't like operate Vine separately. They just essentially shut it down and folded it into Instagram, and Facebook. And then they bought WhatsApp, and then after that, the government stopped letting them buy things because they were getting too big and monopolizing the social media sector. I even believe there, at least there were reports that they tried to buy TikTok way back when. So Meta would like to buy these other companies, but since the government doesn't let them, what they tend to do is just copy and iterate the new features that these newer platforms are bringing in, right? So TikTok starts doing reels or reel like content, so Facebook starts reels, right? Stories, I think Snapchat started that, and then so Facebook and Instagram started doing stories, right? So that's pretty much what they're doing now. From an asset standpoint, they got $276 billion, and total liabilities is less than 93 billion. So once again, that's a greater than a 2-to-1 ratio. So Facebook is well capitalized to weather any financial storm. I think this is a really good stock to invest in. I've been waiting for this thing to pull back forever, and the issue is this damn thing just does not pull back. Look at that. It went up after earnings, went down a little bit, but like this thing has just been moving since way back here. This thing has just been moving. So, great stock to invest in. I just don't know where to get in because I would typically like to get in around a 200 moving day average, but it barely came down here. It's been so bullish. It hasn't been coming down. And then now that he's been seen at all of the Trump parades and things of that nature, I think the next 4 years is going to be a lot easier for him than the last 4 years, personally, when we're talking about Mark Zuckerberg. But I would love it if it came down to like 550. 550 would be my price for Meta, where I would want to try and enter. But good luck, for that thing trying to fall. If just looking at the numbers, the numbers that are growing. The only thing that I'm kind of concerned about is that advertising being the one trick pony. It does need to find some other vertical, but I don't see Facebook ads doing any worse anytime soon because I know personally from my company, I'm spending more every single month, every single year on Facebook ads as of now. All right. All right. What we at next? Next, Tesla, my favorite company. I say that facetiously. Tesla. I'll go on my rant once again. Here's my issue with Tesla. If you think Tesla is a robotics company, then yes, I can understand you wanting to buy and invest in this company because you think they're going to sell robot technology and that's going to be the next biggest thing. So if it's that's your long shot bet on Tesla or your hypothesis, I understand investing. If you're investing on Tesla purely as a car company, that's where I have an issue. Because let's just look at the financials, right? Once again, Google Tesla investor relations and you'll find this data. What I do not like about Tesla's revenue or their financial status right now as a car company. If we're not saying that like they're a tech company, yes, they're a tech company because there's a lot of tech in their cars. But from a car company standpoint, look, I don't like how this looks. Like the last quarter of or quarter three of 2024, they had 20 billion in automotive revenues. And then this quarter, it's down. Year over year, their sales from selling cars are down 8%. So, other than Elon running the country, there was a report that he spent, what was it, like $260 million in this last election to try and get Trump elected, which was probably a good use of his money, if you ask me. So, I understand the stock is popping because of that. They think he's going to have clear sailing over the next 4 years because he's so close to the presidency. But I just don't like what the numbers look like in Tesla personally. Like the energy generation and storage revenue is going up, and I like that. But the car revenue is clearly their biggest vertical, and that's declining by 8%. So the biggest vertical is declining 8% year over year. These other segments don't seem like they're enough to really like keep pushing this. The total revenues were up 2%, likely because of the energy generation and services revenue going up. But I just don't like that from like a car company standpoint. I think they had where are the deliveries? Um, the Model 3, which is their best selling car, production is down, right? Year over year, down 8%. Um, Total production down 7%. I just, I don't know. This doesn't look like Meta's uh, revenue number Meta's income statements. It doesn't look like Microsoft. Even Microsoft had a bad showing in terms of its stock price. But when we look at the numbers, Like the numbers are going up consistently. I don't like Tesla's numbers. That's it. That's the issue that I have with it. And with Elon, yes, the man has built $5-6 billion companies, but my thing is, what is he focusing on right now? Is he focusing on Starlink, or is he focusing on X? Is he focusing on running the country now? Um, and I understand he's this evil genius and whatnot, and has a ton of extra drive that the normal human doesn't have. But I'm just looking at Tesla's numbers, and then is he going to be building this robotics section inside of Tesla or one of his other corporations, or is he going to start up a new corporation for that? So that's my issue. This is an Elon led company, and I think it's up because of Elon. But from how it's being ran right now and what the numbers look like from a revenue side, it's not growing that fast, if anything. So that's my assessment on Tesla. That's not to say that I wouldn't trade it, but in terms of a long term investment right now, especially like where it's at, I don't like it unless you're betting on, like I said, the robotic side. If you think he's making these bots that are going to end up help in everybody's homes and whatnot, and they're going to be Tesla robots, then yeah, put some money in Tesla and expect over the next 5 to 10 years that this is going to be the next revenue driver. But if you're looking at the car to be the next revenue driver or to significantly increase right now, I don't think the numbers look that good. Right. So next one, let's talk about Apple. Right. Um, what does Apple sell? They sell iPhones, they sell MacBooks, computers, they sell iPads, and they sell services. Uh, Things that are in the Apple Store, uh, the services that you might be, the cloud services that you might be paying for when you run out of storage for your photos, things of that nature, right? All of the things that the $2, the $5, the $10 that you might be paying Apple for different things that you're downloading, right? So those are, I would say, it's four verticals, right? Going to the actual earnings report or the financial statements, right? The results. Here's what they look like from a macro standpoint. Products 97.6 or 97.9 billion this quarter. Services 26.3 billion, and it's pretty much breaking its segments up in terms of products versus services, right? And so the revenue is up from that same quarter of last year from 119.5 billion to 124.3 billion. So you look at that and you're like, damn, yeah, Apple's they've keep on trucking, they keep on making more money, right? And I do think they're going to be around, but it's the same. I think they have the same issue as Facebook right now. They're a one trick pony in terms of the iPhone, and so is Meta, right, in terms of advertising. So they need to find another vertical. What they are doing right now is they're figuring out how to make more money off of their existing client base. And that's what I think the services are. They're not really growing their client base or selling more products. They're squeezing more money out of people that are currently inside of their ecosystem with the services, right? But if you look here in the Americas, um, well, before we go specifically for the country segment, let's look at the categories. iPhone sales are down, right? 69.7 billion the last quarter of last year to 69.1 billion. That's a problem, especially over time. If people aren't buying their new version of their phone, they're skipping 2 or 3 versions before they renew, right? MacBook revenue is up a little bit, but not as significant as the iPhone revenue, which is their big horse, right? iPad revenue slightly up, and then their wearables slightly down, pretty much flat. The biggest thing that's been growing, right, is been their services, right? 23.1 billion of the last quarter of the last year, and then 26.3 billion this quarter. So it seems like this is where they are making the biggest strides right now. But really, like, they need something else other than this iPhone. If this stops growing, then their growth is going to be flat in the future. So they need, unless they just keep raising their prices and or keep squeezing their customers for more and more money every month for cloud services or whatever else they're charging for, right? You see their sales in Americas are going up, right? 52.6 billion versus 50.4 billion. In Europe, they're going up, right? That's promising. The biggest issue is in China, they are going down. And that is the last biggest market that the iPhone hasn't really tapped and where it has the most competition. And you see the sales are actually decreasing, which is an issue. Japan is slightly up, and Asia Pacific, the rest of the Asia Pacific is slightly up, right? So that is Apple. If you look at how much cash, they got a lot of cash on hand too. They got $30.2 billion of cash on hand. They got $344 billion in total assets versus 277 billion in total liabilities. I actually would like to see that asset to liability ratio a little bit higher, but as long as it's above a 1, Apple's going to be mostly secure, especially because it has this $30.2 billion of cash just lying around. All right. Bam. And that's pretty much it. So if we go back to our names, like, I like Microsoft the most for me to personally invest in the near future because it's been growing revenue a lot. Its management is second to none. Um, and I feel like that's where the most divergence is between like growth in the company and revenue versus what the stock price is doing. Meta, I love it, but the damn stock price is at an all time high. I don't buy anything at an all time high. So I would need a significant pullback on Meta. And Zuckerberg has been on a tear lately. Good luck trying to get a pullback on Meta. Tesla, I can't put this in my long term portfolio. Um, I gotta see a prototype of this thing that actually works. That's not like somebody in a suit or something. The robot before I start getting bullish on Tesla. I do understand he's running the government right now. I'm just not bullish on the car company right now. And this is somebody who drove 2 or 3 models of Teslas too. Like I love the car. I just don't like what the revenue looks like right now. Apple, I like Apple because they're well ran, but they need to find something else other than this, right? They need to find something else other than the iPhone. They have so much cash on hand. They missed the AI wave where they didn't create their own bot, their own LLM. So they need to find something to do with all of that cash other than just squeezing more money out of the iPhone over the next 5 years. But in terms of a relatively safe play, Apple is always a relatively safe play. Just because the people that do have iPhones, especially in the US, love it. I don't see them switching anytime soon. At least most of my friends that have an iPhone. I don't have an iPhone. I have a Pixel, but I think most of the people that I know have iPhones aren't thinking about switching. So if that's the case, chances are their services revenue is going to keep going up. They're going to keep increasing the price of the iPhone with inflation. So their total revenue is probably going to keep going up. They just need to find something to do with that extra cash. They do have a great CEO, but he does need to find another product other than this, similar to kind of Facebook. But I see Facebook trying more. And I think that's my issue with Apple. Facebook has tried and failed a lot more to innovate on a new product than Apple has while still making a lot of money. And I feel like Apple has almost stopped trying to innovate as much as like Meta has. So, but it needs to start. It has this huge cash pile. It should just innovate a little bit more, start spending more on R&D. Next topic. This is the thing that upended the market last week, specifically Nvidia. For those of us, including myself, that own Nvidia, DeepSeek. What is DeepSeek? It's this new Chinese LLM or large language model. So it's essentially like a Chinese version of ChatGPT. Why did it cause a lot of the semiconductors and chip stocks to fall? Well, it's because of what they said. DeepSeek said that it only took $6 million to train its open source large language models. And since it only took $6 million, that there would be less people are inferring that there might be less computing power needed if China could develop a ChatGPT clone or look-alike for like a tenth of the price. So the issue with that is you can't really trust much of any of the information coming out of China. So they're saying they only spent $6 million, but a lot of people in the tech sector, they're thinking like chances are it probably costs more than that. And then number two, because of all of the chip curbs that the government's been doing, they probably got their hands on some chips illegally and can't even publicly state that they're using Nvidia chips that they're not supposed to have. So that's why I also think we saw like a bounce back the day after the sell off, is because no one has really been able to confirm if it actually costs less to train their model, or are they using chips that they shouldn't have. And so they're saying it only cost 6 million, but they paid a bunch for some chips that weren't supposed to be sold to them, that were probably sold to them on the black market. And then number two is because they were able to train their large language model on inferior chips, if that is actually the case in terms of what they're saying, because they don't have access to the most advanced chips. Are people going to start pulling back their spending with Nvidia, Taiwan Semiconductor, that and all of the chip stocks are going to be affected as a result? And for me, I'm like, we haven't seen that yet. That is yet to be seen. And I don't think we have even substantiated their claims about their training costs and whether lesser chips can be used to create large language models. And then, even if that is the case, do I think companies are going to want inferior chips or the latest chips to get even more advancements than what's currently out there? I don't, it's just like if the new car model comes out, most people don't buy the old car model. They're going to buy the new car model, even if, especially if it's faster, right? And that's what a lot of these chips are. They're faster. So, yes, you could potentially create one of these LLMs with slower chips, but do I think these big $1 trillion mega cap companies are going to want to use the slower chips if the faster chips are available? I don't know. And I don't think that's and I don't think that that would necessarily be the case, but we'll see over the next, coming weeks, and especially as AMD reports earnings next week, and then we start seeing Nvidia earnings over the next couple of weeks, if we see any decline in chip spend. But it's my understanding that the Blackwell chip that Nvidia has been producing is sold out already. So with that being said, I don't necessarily think, at least at this moment, that that DeepSeek is and their open source LLM model is going to cause a long term headache in the semiconductor market. And then number two, with the Trump presidency right now and him placing these new tariffs, um, I think he's going to ban a lot of us, especially in the US, like from using technology like that. They just banned TikTok, and they're trying to figure out whether they're going to sell that to a US company. So, do I think that they're going to do something similar with DeepSeek? Probably, you know, my hypothesis. And that's the next thing. Trump tariffs. He just announced some tariffs on Mexico, Canada, and China. So when we're talking about the overall market, I'm kind of hesitant right now to trade. I want to see like how some of this news prices in. I've been reading some articles indicating that Mexico and Canada are already retaliating. So the prices of certain goods are definitely going to go up. And whether or not they hammer out some new trade agreement or relent, or what industry that's necessarily going to affect, and that would be some homework, is to figure out like what are the main products and services that are exchanged between Mexico and Canada, and what were the specific tariffs, and figure out which industries are going to be affected by the tariffs, to pick a short position or a long position one way or another, right? Looking at this week, we got a big earnings week. We got Google coming up next week. We got Amazon coming up next week, and we got Eli Lilly coming up next week. I have some leaps in Google. Google went on a tear last week, reached 200. Right, my old target was 190, and we're at 200 now. I'm thinking about just holding on to my position in Google and letting my calls just convert into shares. Looking at what Meta's earnings were last week, this is why I think Google took off. Some stocks trade in sympathy with one another. If you're looking at specifically the ETF of XLC, which is the communications sector, the two most heavily weighted names in XLC are Google and Meta. Meta shot up, so XLC shot up, which means Google shot up, and really Google is the biggest competitor to Meta in the ad space, not in the social ad space, but just in the internet ad space. So, from a hypothesis, I think Google investors and traders hopped in last week because they saw Meta was doing so well that they're hypothesizing that Google is probably going to have blowout earnings as well. Additionally, we saw Google CEO at the inauguration, and so I assume people are hoping that the DOJ gives them a break with a lot of the antitrust lawsuits that have been going forward against Google recently. Right. Um, so that's pretty much it from like our earnings. So I think the first batch of substantial earnings have come through. And now I think this next week and the next couple of weeks, we're going to be through most of the earnings period. The last big shoe to drop is going to be NVIDIA earnings. I don't think it's probably within a week or two. NVIDIA usually reports a little bit later. I'll look that up. But that's the last big shoe to drop before we're kind of done with earnings. Looking at my weekly stock picks for this next week in terms of swing trading. Once again, my disclaimer for this entire broadcast, this is for informational purposes only. I am not a licensed financial advisor. You should refer your trades and investments to a licensed financial advisor. Trading is risky, investing is risky. Do so at your own peril and do your own research. The reason for this broadcast specifically is to give you the information to where you will be able to do your own research, right? So, how do I build my watch list for swing trading? Once again, this year I am trying to do less swing trading, less moves with maybe a little bit bigger size. And I honestly, just looking at my trading from last year, my leaps have been what's been most profitable for me. So I'm using my exhaustion strategy a little bit less, and I'm more so waiting for leaps. Like if you've been looking at this podcast for the last few weeks, I'm waiting for a pullback on AMD, on Micron, LVMHF, Lilly, which came 2 cents away from my price. And then I think there was one or two others, right? So I'm waiting for pullbacks, but more so for these long term plays, for these leaps that I might be in for over a year or so, right? So that's mostly what I'm looking at, but I still am looking for particular swings and bullish names. I missed out on a gold trade last week. I was looking for a deeper pullback. It wasn't so deep, but that thing just took off. It would have been an amazing trade. So, in terms of what's on my list this week, if we look at Koifin, right? Gold sector, this is the gold miners ETF, but the gold sector through the futures, which is /GC, or the ETF GLD is what I'll trade the futures with, but specifically through that ETF. That's really what I'm looking at. Gold's been popping the last week, especially as that DeepSeek news came out. XLV is up, But we got a lot of healthcare names reporting next week, so I'm probably going to stay away from XLV, even though that's been trending in the right direction. If we do see some good news on Lilly and AstraZeneca and a couple of others that I saw, Novo Nordisk, next week, then and I see XLV keep going up, then that might be on my list for next week. But I don't want to trade anything inside of XLV this week because there are going to be a lot of big names reporting that are going to affect the entire sector. What I do like though is XLF because most of the biggest names in XLF have reported. So really, I think those are my two sectors. I actually even like XLC too, but I would want to wait until Google reports. If Google reports great earnings, then I'll probably be looking at XLC next week as well too. But for this week, I like gold and I like anything inside of the financial sector. Not anything. Let's go pull up my chart. Specifically XLF. I like the ETF itself. Look at the bullishness. In fact, I was looking for a pullback on Friday that I didn't get. I'll have to reset this level on Monday. JP Morgan looks fire. Bank of America's kind of flat, so I would take Bank of America off the list. Wells Fargo looks fire right now. In fact, I was looking for a trade on that on Friday and didn't get a pullback. City is better than Bank of America, but I would prefer JP Morgan, Wells Fargo, or XLF. Visa's fire. MasterCard is okay. I like Visa a little bit more, but MasterCard looks good. And once again, if you look at this entire sector, Goldman Sachs looks good. American Express is okay, right? But it's still trending. This is the sector that I want to be in next week because the entire sector is up, right? I don't want to go against the current. I don't want to go against the tide. The tide is looking like right now the financial sector has been trending and most of these names have reported already. So there's going to be less volatility next week. Don't quote me on that. Still go look to see if any of these bigger names are reporting, but it's my understanding that a lot of them already have. So I really like XLF next week. This is where I'm going to be looking for a pullback on. Specifically, if I had my top three names, would be XLF, JP Morgan, Wells Fargo, and Visa would be my top three in the sector, or four, I should say. Individual XLF as an ETF, which is probably the safest because it's all of these names, versus JP Morgan, Wells Fargo, and Visa. But these three look really strong. Even City looks decently strong. I would like it to break this level right here where this yellow bar is. But JP Morgan, Wells Fargo, definitely. I would say those are like my top two outside of XLF itself. And then if we go look at gold, gold hit a new all-time high, right? So, and I was waiting on a pullback that didn't quite get there on Friday. This was the options class that I'm taking. They took it on this day. I was waiting for a more significant pullback, but I should have took it on this day. And they had a monster trade from this pullback, this big red bar right here, catching it down here at the bottom. I was waiting for it to drop a little bit lower. I should have hopped in, but that was a monster trade. So I'm still waiting on a good significant pullback from gold because look at the trend, higher highs, higher highs, higher highs, higher low, higher low, higher low, higher low, higher low. Gold's been trending, especially if we have any news that's bad next week or that's going to terrify the market. Gold is usually one of those safety plays. So if there's some bad news, I wouldn't be shocked if gold continued to head up, right? So that's all I got for this week. Those are the two sectors that I'm looking at next week from a commodity standpoint. I'm looking to trade gold, but I wouldn't be trading GC, the futures, just to show I'd be trading GLD, which looks just like it. If you look at the chart, right? If you look at GC, and in fact, let me pull those up separately. Right? GC and GLD look almost identical if you zoom in a little bit. or zoom out, right? Because this is the ETF based upon the futures, pretty much. So, or the commodity. That's it. Any questions? Anything anybody want to look at specifically?
You're done for me.
Yep. No stocks. Anything anybody want to look at? All right. Not hearing anything. That's it for this week. 8 a.m. every Sunday. Mokama Sunday service. Making it rain without the umbrellas. Oh, Chris, you raise your hand. Say something.
Yeah, just had a quick question. We were talking about Tesla
Yep.
and how he really can't tell where his priorities are, whether they're shifted, whether or not he's going to continue, create new corporations.
Yep.
Just wondering for the vehicles alone, I see that the sales went down. Would it be helpful? And I haven't done it, but I remember when Tesla first came about, they were just talking about how we didn't have the infrastructure to for him to sell, you know, at a high clip. So I'm just, or was as high as he wanted to reach. So I'm wondering if you track whether or not he's put pouring money into infrastructure. Do you think that could be a telltale sign of what he's doing?
At this point, I don't think it's the infrastructure because they built a bunch of plants, I think, in Germany and whatnot, and in terms of what they were trying to do, and even in China, I don't think the infrastructure is the problem. The
Well, I meant
pro-
I meant more like charging stations.
I think
Especially like lower income communities and
I think that that's great, but I don't. But the vast majority of their income is coming from car sales, so yes, that segment can grow. Let's just look at their. So if you're looking at their charging infrastructure, that's energy generation and storage, right? Like that's $3 billion. That's growing That is growing at 113%. The issue is as a percentage of their sales, like their sales 19.7 billion in car revenue. So unless this starts to get up in the tens or the teens, and it doesn't look like it's growing that fast. I don't think that that's going to make up for the lack of car sales. And I don't think they're not having car sales because they don't have capacity. I think they don't have the car sales because people aren't buying their cars as much as they used to, and or they drop their price on it. So if they're not increasing the cost, I mean increasing the price on Tesla, there's only two ways for any company to make more money. You sell more customers, you get more customers, or you get more out of the customers that you currently have by either increasing the price or selling them something else. So if they're not getting more customers, like, and they're not increasing the price of their cars, they've been doing price decreases. How is this number going to go up? The only thing that I can see in the future that would make this company different than an average car company like a Ford or a Toyota or whatnot would be these robots that they're talking about developing. And with Elon, I don't trust anything that comes out of that man's mouth because I know he's always like promoting his companies. That's what he does. And he's one of the best CEOs at pushing up the stock price of his company. But I'm just looking at the revenue like if Tesla was doing that well, wouldn't you have seen this go from 20 billion to like 22 or 23, right?
True.
Similar to look at Meta from 40 billion to 48. So for me, it's just like when I'm allocating capital, I'm taking a bet on like I want the fastest horse. And so if I'm looking at like 7 or 10 or 20 when I did that video on the 20 best stocks in the market, what are the 20 best horses to invest in? I would rather a company that's growing from 40 to 48 billion or from uh, 62 to 69 billion than a company that is, where's this gross revenue, versus 97.6 billion for the year from 96 or 97.6 from 96.7. Like it barely grew. It grew 1% in revenue. right? Versus these other companies are growing their revenue like 15, 20%. Even Apple, I think they have an issue. Um, I think they have an issue with iteration, but their revenues are growing, right? The company is still growing. Tesla, I'm not seeing a lot of revenue growth year over year. 1%? Like, I'm not looking for a 1% return. I could get that in a high yield savings account, right? So that's all I'm saying. What people are betting on is that these robots or some other technology that they're going to invent in the future is going to make up for these earnings. But like, I don't like the earnings. And then look at the year over year for Tesla, right? 2024 and total automotive revenues from car sales 77 billion. Last year was 82.4 billion. So that's a negative 6% in car sales.
Yeah, that's a hit.
Right? I would rather invest in Apple, Meta, or Microsoft.
Yeah.
Right? From a
Speaking of
long.
high yield, are you still with CIT?
Yep.
Yeah, I moved everything over there. Thanks for that plug, man.
How much is it getting you? Like 4.6 to 5% or something like that?
Nah, I think it's at it's at 4. It's the highest. I
Yeah.
know American Express, historically was the best with that, but I got my whole family, so I put it in the family group chat. Got everybody switched over.
Yeah. So
Every bit matters.
yeah, because it's like, and in fact, I just got a tax statement because I got to report that to the IRS.
Yep,
I made like
yep.
$5,000, $5,500 in earnings interest last year. So that's
Right.
what I'm saying. So like, and I'm not saying that the stock price didn't do better than that 4 or 5%, but I'm just looking at, is this something that I would trade Tesla all day long. I do trade Tesla, but do I want to own this right now? Looking at the earnings from a fundamental standpoint, no, I don't. I think there are better companies out there that are making more money, hand over fist, than Tesla, that are growing faster. So I would rather put my money in Meta, in Microsoft, and Apple, and Google. People that are growing, Eli Lilly, just I think companies that are a little bit better than Tesla. I'm not saying Tesla isn't a horse to bet on. I just think there are better horses out there. Even like my black horse play has been Shopify, man. That thing's still been booming. Hit a newer high recently. We'll see what it does on its earnings. But Shopify, from that bottom, I got in around here, has come up, right? I got a strike price I think at $20 on Shopify. That's at 116. I hit like damn near 120 last week. But I'm just looking for better horses. Even AMD, like if you go look at AMD, and they're reporting earnings next week, so don't quote me on this. But if you go look at AMD earnings, I think that that's a better play than Tesla, just because like they have growth. Like last quarter, the revenue grew 17%. Tesla's grew 1%. Right? The net income, the profit grew 157%. Tesla's didn't. So I just like I just think there are better companies out there to invest in than Tesla currently. So that's why it's not on my list. Unless, like I said, you're going for that 5 to 10 year robot play. If that's what your hypothesis is that they're going to lead the market and they're going to capture all the value in that market, then yeah, be my guest. But I just don't think Elon is predictable enough for me to put my capital there. I would
To
rather.
your point, he could just create a whole other corporation.
Yeah, because that's what he did with everything else. Because
Yeah,
if he wanted to put Starlink in Tesla, he could have. If he wanted to put the Neuralink in Tesla, he could have. Right?
but he didn't.
He didn't. The Boring Company, he didn't. SpaceX, he didn't. So like, why do I think that he's going to do this robotics company inside of Tesla versus just doing something different? And that,
Especially when past performance hasn't suggested that he would.
yeah, he started up a new AI company. I think I don't know if that's inside Tesla. Like that's what I'm saying. Like he does a lot of different shit. So I can't trust him to do what he says he's going to do or to not spin out some other company that becomes his next $1 billion pet project. I don't know. So that's my issue. I'm not saying I would rather invest in SpaceX or Starlink, but those aren't publicly traded. But Tesla, I see it as a car company right now until I see their first robot come off the line. Then that's when I'll get bullish Tesla. It might be too late then, but I just think there are better companies out there right now.
And what are these robots supposed to do? These Tesla robots.
I don't quite know. That's they're supposed to. That's what I'm saying. I don't know if they're developed enough. Like they're supposed to help you around the house and do things like what we've seen in like iRobot and stuff like that. But I don't know yet, and that's why I'm like, it really would be. I'm not saying I might not put some money in it as a one of these home run hits, like, but I'm not gonna make it one of my major plays.
Yeah,
Feel me?
thanks.
Yeah, at least right now. If it pulled back to like 200 or 150 or something like that, yeah, I might hop in. But at 400, 450, nah, I'm cool on Tesla. I think there's some. I'd rather be in Microsoft. Yeah. All right, that's it for this week. I'll see y'all next week.
All right, thanks, Mom.
Yeah.